Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on January 26th. My name is Ian. This is Joseph, or Tuz, as we call him here in the office. Tuz, it's good to be back sitting across from you doing the pod.
I know it's been a long time. I don't think we've ever actually done a pod together.
Have we not?
If we haven't, we may have done one, but it's been a
Right.
while. Usually I'm with Will.
Yeah.
But yeah, no, it's good to be on the pod.
Yeah,
It's been a
it's
while.
good. We got a full house in the Richmond office today, so figured we would be good to get some people that back in front in person here. Definitely coming into a pretty interesting movement across markets over the past few weeks. I mean, I feel like we say that every week. We come in and say that there's interesting movement. I mean, you could say going back the last 18 months, every single week has seen some pretty interesting movement,
Yeah.
right? But it is not every week that you can say new all-time highs.
Yeah,
Right.
it's been what, I think over 700 days
It's
since the
one of
last
the
one.
like a pretty long historical stretch without all-time highs, right? And so we did see the S&P, what I think it was last Friday was the first day it marked a new all-time high. There on just from an all-time closing high perspective, we're looking at all-time highs now on the default point and figure chart there for the S&P 500, SPX at 4,900 that was reached earlier this week, right? I mean, it's a real strong looking chart. We don't have as massive a column of X's as we saw toward the end of last year. We're not looking at 32, but we are looking at 4 consecutive buy signals after that big column of X's up. Notable stem, we are in overbought territory, but good to be saying all-time highs again for sure.
Definitely. And even if it is in a bit of a weird position with the kind of lack of a lot of support below it, it's good to finally be able to say, yeah, we hit a new all-time high after 2 years.
Right. And
So
when looking at some other data and stuff like that, it's not typical that you see new all-time highs and turn right back around and move lower, right?
no, I mean, we actually touched on it in a piece. This is it's pretty rare that we reach an all-time high within a year with the yield curve being inverted.
Right.
Now historically, there are some instances where it's pretty negative, and there are some instances like 1998 where the next year is actually still pretty good. So not a ton of data points to say either direction is going to be good or bad, but it is interesting nonetheless that all-time highs while we still have the 10-2 year inverted. So that's just another weird happening in the market.
Another weird thing you can say, yeah, it hasn't happened since blank. I feel like we can keep going back there. But I mean, when you're talking about yields, right? I mean, we've wanted to get into the bulk of today's conversation. I mean, we can talk about new highs. We talked a lot about the indicators, I guess, over the course of the past couple of weeks, kind of broader thematic things to watch out for, or review 2023, watch out for 24. So I think today we wanted to dig a little bit more into the weeds of earnings, right?
Yeah.
What's going on across the broader marketplace with earnings. Really just diving like headfirst into the heart of earnings season. I guess we kind of feel like it creeps up closer and closer to the start every time. It's
Yeah, I
hard to
know.
believe we're almost through the month of January. But I mean, you cover the financial sector that we have been doing morning updates and a kind of like sector commentary around that space. And we've seen a lot of interesting movement in the financial sector off of some of that rate movement, right?
Yeah, I mean the drastic fall in rates. I mean, you can just look at the 10-year chart. You can see the steep decline I had from October through pretty much the exact end of last year. Almost looks like the exact inverse of the Spider S&P Bank ETF chart, KBE. And if you look at just broad sectors, financials were in the doghouse for a while, and they have really been one of the actual leaders in this rally that we've seen over the last 3 or 4 months that led that S&P to get to new all-time highs. Earnings have been, I would say, relatively mixed on a broad base. But we haven't seen anything that's like, oh, they were terrible, at least from a price standpoint. KBE right now did have a big column of X's in the overbought territory, pulled back to start off the year, has now reversed back into X's. Another interesting thing to look at when you're looking at that KBE chart is it's right in the middle of that range it was before the regional banking crisis in early 2023. So we're kind of right back in the middle of that range. I would not be too surprised to see us kind of chop around in this range after especially such a strong move at the end of last year, before it kind of decides to make another move higher, or maybe even it could break down. Either way, we've seen a ton of positive developments there. A couple levels I would really keep an eye out for is going to be 4250. That was the July high on KBE. We have support now established a bit higher at 4350. So that 4250 to 4350 I'm really eyeing to lean on as support moving forward. I think as long as those levels hold, you got a good chance that this momentum can continue to carry it higher. I don't know if you want to talk about your broad-based tech first, and we can go trade stock.
Well, I mean, so you were talking about some of the looking at the chart of KBE there. I mean, looking at some of the largest holdings of it. I know you were talking earlier about like JP Morgan. So maybe we can run through some of like the more financial oriented areas there. I mean, that honestly similar like past few columns on a different level, the KBE, but it's not a bad looking chart for JP Morgan. You're getting a reversal back up today.
And that was one of the few strong banking names last year. Actually did pretty well last year.
It rode that trend line pretty consistently.
It broke down a little bit at the end of last year. Yeah. I think rates hitting the 10-year hitting 5% kind of dragged this thing down. But I mean, it shot right back up as yields fell. And this is, if you're looking at bank stocks last year, if you had something trading above the March high, in the summer months, like JP Morgan was trading above that March high by July, that was pretty rare across the space.
Right.
So that was a really good sign of strength for JP Morgan. It's continued higher. It's kind of flagging up here at the top of its trading band, which I think you would expect. Again, a lot of these moves put these stocks into heavily overbought territory. So a nice pullback and then a pretty quick reversal right back into X's today. Is a really good sign for JP Morgan. I think if you look at JP Morgan, that's a good sign for the banking space in general, as that's a leader. On the other hand, a big bank that really is still in the doghouse, I would say, be Bank of America. Only 2 out of 5 technical attributes. It's been in a negative trend since April of 2022.
It's getting close to that trend line.
It's getting real close to that trend line. So if we can see a change in trend here with 2 more boxes, right now it's at 34, needs to get to 36 to break above that bearish resistance line.
Which would put it back to that favorable attribute.
Exactly. I put it right back to a 3. And it is above kind of where it was in March of last year, finally. So even some of the laggards in the banking space are attempting to make a change in their trends.
Yeah, and Bank of America is one. I mean, I remember we utilize kind of sometimes similar content slides with new stocks or new things to look at. And I remember Bank of America versus market was like one of the most classic RS relationships that we looked at. We always looked at Bank of America versus SPXEWI. I mean, that moved to a sell signal back in March, so we had to stop using that chart. But it tends to show some pretty kind of consistent movement once it gets going in one direction, right?
It does. I mean, you don't see trend changes in this chart very often.
Right.
You got June of 2020, rode that all the way until 2022, where it broke down, and it's been in a negative trend since mid 2022.
Yeah.
So pretty long lasting trends on this one, especially on the default chart. And then one last name that hasn't reported yet, JP Morgan and Bank of America have obviously reported. They're one of the first ones of the season to usually report.
Mm-hmm.
Visa reports this afternoon, which will be yesterday when this podcast gets released. But that has been one of the most consistent names in the financial space. It's a 5 for fiber. I would say Visa and MasterCard have moved very similarly in that regard. But Visa, 5 consecutive buy signals. It's been on a buy signal since late 2022.
Wow.
So never even gave a sell signal last year during some of the volatility that we had.
Not many finance stocks you can say that about.
No,
right?
You can't say that a lot about a lot of finance stocks. It is heavily overbought right now at 92%, near the top of the trading band. I think a return to the midpoint of the trading band would be welcomed, and that would be a pretty favorable entry point, in my opinion, around 256, 260. If you were looking for a price target to where you could look at an entry point. But that's been an exceptionally strong name. Those credit card names have done really, really well.
People keep racking up those.
The fees, yeah. As long as people keep spending money, it's not a bad business.
Hopefully they keep paying it off.
Yeah,
right. I mean, yeah, there's a lot of different. And Visa is kind of one of those stocks that is not your typical. I mean, it's not within the kind of the bank space, not your typical kind of finance oriented area, and it tends to differ from, performance and like chart movement, and looking historically comparing like Visa against even like JP Morgan. Different kind of technical pictures at different times, right?
Definitely, yeah. In the finance space, it kind of gets lumped together, but you have your banks, You have your, kind of the payment type of stuff like Visa and MasterCard. And then you have insurance, which
Right.
actually held up really well. And if you look at some of those names, there's some I can think of off the top of my head, like Aflac, for example, has been a really strong stock for a long time. Brown and Brown, ticker BRO, has been a really strong insurance name. So the insurance space kind of underrated, usually
It's not
not
as fun to
moving.
talk about.
Yeah, it's not as fun to talk about, but been really consistent over the last couple of
Right,
years,
right.
where banks kind of catch the headlines, and we're starting to see them turn up a bit, but the insurance space has done really well.
Yeah, no, definitely. And I mean, so talking about consistency, right? Another area shifting from finance into areas that maybe haven't reported yet, things we're taking a look at, or keeping an eye on over the course of the next week or so from an earnings perspective. Microsoft. I mean, it's hard to talk about consistent improvement or notable improvement without Microsoft, right? It just crossed over what, $3 trillion, I think, in market cap.
Across Apple for number one.
Right, and it's joined Apple, which is the only two companies to be like over 3 trillion, I think, in market cap. So I mean, it's already up 7% year to date in the first 3 weeks of the year, which is like close to the average return of the S&P over the last like 20 or 50 years or so. But yeah, notable improvement, still strong 5 for fiber from an attribute perspective. Reporting earnings next Tuesday, I believe. So there's several stocks reporting next Tuesday. We're going to take a look at 3 of them here. 3 of those in the big kind of part of the Magnificent Seven. You got you got Microsoft, you got Meta, and then you got Alphabet or Google, right? That are all reporting on Tuesday. So Tuesday should shape up to be a pretty big day. But Microsoft, strong 5 for fiber, is in overbought territory. It's a consistent theme that you can see with a lot of these areas that are showing strength. So 3 consecutive buy signals, you wouldn't get initial support until that 364 point, which is quite a bit lower than the 400 level we're at right now, right? Kind of 10%-ish lower, which is also notably the high that we got to in July. So that kind of prior resistance might be that kind of support level and matches up with that support level that we reversed down to there in December. So if we don't get a favorable view from Microsoft, that 364 level would be that prime area of support to kind of look toward initially. On the flip side, I mean, there's no overhead resistance because it's at right. So you are overbought, which is definitely one thing to kind of keep in mind. But I mean, other than the overbought posture, it's not really much negative you could say about Microsoft.
No, not at all. Especially on short term, overbought, but intermediate and long term basis, it's been killing it.
Yeah.
So
yeah, and you look at any of these areas around earnings, I mean, overbought can quickly become more overbought. But if we do get a disappointment, I mean, that downside support level there at 364, further support down in the 320s, 330s range, it'd kind of be where you want to look toward from there. But looking at Meta platforms, META, also more consistent. You got maybe 4 consecutive buy signals coming from there. It's up 10%, so outpacing Microsoft on a year-to-date basis. I mean, also consistent support back then, also at highs up there at the 396 point, right? Meta had a lot of work to do to kind of get back above high levels that we were at in 2021. It only crossed back above that 384 high from 2021, like over the past few weeks, right? I mean, you were looking at it last year, it was Meta would be up 100%, 150, and it's still not back at the levels that we were at before.
I think what was it, down 70%?
Crazy. It just shows you how when you're down that much, if you're up 70, you're not back to even, right? I mean, just some of that conversation. But just real sharp movement higher. That's just been pretty consistent. I mean, you got some consolidation along with the rest of the broader kind of growth oriented space toward September, October timeframe, but just solid kind of support baked in there. It's a pretty notable overbought posture, but you got support at 360, you got further support at 344, you got support at 320, support at 316. So there's a lot of support levels kind of baked in there for Meta.
A lot of stair step in action, which is good to see because you could establish that higher levels of support. And from an RS point, not just versus the market, but versus its peer group. Even though tech stocks have done really well over the last couple of months, I mean, Meta was doing really, really well last year. Part of that may be because of the recovery from down 70% before,
right?
But it was showing really high relative strength versus its peers for pretty much all of last year.
It was pretty consistent for the whole year. Yeah, you get those consistently higher lows, like you said. Good sign to see. And then the last stock to look at that we're reporting on Tuesday, different picture looking at Alphabet or Google, right? I think with movement today, Google is breaking out, or GOOGL. Alphabet Class A is breaking out to new all-time highs with today's move. So it's broke up to the chart level of 152. That surpasses the 150 level that was reached in 2021 and in 2022. So finally, we can say it joined the all-time high camp, right? Very different looking picture. I mean, you don't get the extreme downside movement maybe that you saw from somewhere like Meta, but you haven't gotten the extreme upside participation. It's been strong, right?
Yeah.
But just not the extremes that we've seen from some other areas.
And this is one where I think you could have maybe more legs than some of the other ones that have run up so much because
Right.
it did. I mean, it pretty much consolidated from August until the end of last year. So you had about a 4-month consolidation period, and you finally are starting to see that break out to the upside. You know, that gives it a lot of
I mean, it
fuel
just
to
gave the
continue
bullish
high.
catapult, right?
Yeah.
It's kind of classic swing
Yeah.
deal.
So I think it could have a decent amount of legs behind it already. Moving forward, you know, while some of those other ones you could say, oh, they're really heavily overbought. They've run up a ton last year. This one for the last 4 months consolidated and finally broke out. I think it could have some legs behind it.
Right. And when you look at that, that kind of AI battle, right? I mean, Microsoft, Meta, and Alphabet are the like three companies kind of that kind of looking toward. I mean, a lot of attention was given to probably to Microsoft because of their open AI integration or kind of partial ownership position there. I mean, Meta had some other headlines in play with it kind of leaking some open source AI software out there. I mean, Alphabet, I feel like has been left out of the conversation a lot of times.
Yeah.
If that changes in 2024, I mean, like you said, that could be a pretty compelling technical picture, at least moving forward.
Yeah.
I mean, you got support there at that 136 point, smack dab would be smack dab in the middle of the trading band. Support at 132, support at 130, support at 122. Then you got the bullish support line in there too. It's a lot of kind of more consistent support baked in, and it's the only one of the stocks that we've looked at in the reporting earnings next Tuesday that's not 95% overbought or higher right now. So that also would say it would be a pro in its favor, I think.
Yeah, for sure.
And then, I mean, the final stock, hard to talk about stocks reporting earnings next week without talking about the largest one, right? Looking at Apple. Also different picture than some of those other areas. Another area that hasn't been talked about in the AI space, it's been, I mean, surprisingly quiet to some, but consistently quiet in that AI space. I mean, I've just been seeing headlines coming out recently about people saying that Vision Pro headset is too heavy.
I saw they sold their 3,500 that they made, but you know, or whatever it was.
But I mean, the stock's also, I mean, real sharp pullback earlier this throughout the first couple weeks of this month, right? And it's rallied back pretty solid. I mean, it's not a bad looking chart picture. Yeah, it's not as great from a relative strength perspective, maybe in that computer sector. Just given the movement we've seen, it's only up 1% in the first 3 weeks of the year. But a strong 5 for 5. It's been on a buy side against the market since 2004. I mean, it pulled back in a slightly oversold territory and moved back higher. It's still pretty consistent picture.
Yeah, I mean, really the only negative thing you can say about it is it's not at all-time highs right now, like some of the other ones are.
Right.
There's a lot of resistance there at 190, 198, which is one box away. So we'll see if we can break through that. You know, like you said, Apple really isn't a big player in the AI narrative, I would say. Keyword. I think that's been a detriment to them a little bit. And there's a lot of, you know, when you look at Apple, you know, buy signal versus the market since 2004, you know, everybody knows somebody or uses their products.
We got
a lot of their
2 iPhones here, right?
I got one in my pocket. There is, I think, you know, a narrative out there that there is some concern about, well, what's next for them? You know, you can only make the iPhone so many times
or change it so much
and keep that growth that you had the last 10, 15 years. So, you know, on a technical basis, obviously everything still looks really good, but I do think that's an interesting conversation surrounding Apple is, you know, kind of what's next for them if they're not going to be huge players in the AI thing. You know, what's their next big product or next big software, whatever it is.
Right. And well, and the thing is, we haven't heard anything about them on the AI front yet. But
yeah, I'm sure
it doesn't mean that we're not gonna. I mean, they got Siri collecting God knows how much data out there. It could be pretty interesting. It's only 26% overbought. I mean, you're looking at it from a technical perspective. If you're trying to kind of, not that we're in the market of forecasting on the fundamental or business side of things, you got support at that 182 level. You're the most normalized out of any of these big stocks that are reporting earnings next week. To maintain that consistently strong long-term picture, I mean, wouldn't be a bad kind of area to look toward if you're bullish on Apple moving forward, right?
Yeah, and like, you know, that's the thing is like even the pullbacks are things where the dips are still worth buying on this one. Like even any pullback is still pretty actionable.
Right.
I remember like I was doing options on Wednesday a couple weeks ago, and Apple had pulled back, and I said, well, what the hell? It's Apple. It's like one of the only ones that's not really heavily overbought on the tech side.
Right.
So I might as well give it a shot. And it worked out well this time. But that's just something where
Past performance
you
not
see
always
those.
indicative of future results.
Yeah, well, it's one of those things where you see the divergence between other tech stocks
Right,
and then
right.
like a big tech stock like Apple, and that's something you can lean on those type of relationships and say, well, Apple's either going to bounce back or kind of the other ones are probably going to pull back too. And in this case, Apple bounced back with it. And I think that's kind of the same thing you're saying, where it's much more actionable than a lot of those.
And it's been that. I mean, it's just so massive in size, right? It hasn't gotten those massive, ridiculous. I mean, it's our risk reading of 1.55, right? When you're looking at other kind of big tech oriented areas, out of all of those that we've hit on, it has the lowest. Well, actually, Microsoft's is a little bit lower, so 1.35, but it's not that much more volatile than the market, right? That our risk reading looks at the standard deviation of, in this case, Apple, trailing 36 months standard deviation compared to trailing 36 months standard deviation of the S&P 500. So it's just basically how volatile is a stock relative to the S&P. It's roughly 50% more volatile than the S&P.
Which is for a single stock.
For single stocks
is actually, I would say, like average.
Anything below 2 is typically like, all right, that's pretty normal. I mean, you've seen 3, 4, 5, 6, 7, 8.
NVIDIA is 3.2.
Right. Yeah. Good reference point. Right. So it's Apple's less than half as volatile as NVIDIA. So I mean, you get that kind of more consistent theme in there. I mean, that's appealing to some people,
Exactly.
especially in the kind of the current environment. We're a little bit uncertain about which way certain indicators of rates might be moving forward.
Yeah, I mean, there's a lot of uncertainty still out there. Like, the Fed narrative is still well played. People were projecting a ton of cuts just a month ago. Now we're not projecting any cuts. People were like heavily projecting cuts in March. Now they're not. So there's a lot of uncertainty, especially surrounding interest rates. Equities have really done well in the face of that when you look at the top stocks. But if you do look at something like the S&P equal weight, the waters are a bit more murky on that front.
Right.
So I think that's something to keep an eye on. Really, the next step for this market to really continue to push higher is just to see that breadth improvement. Because we've seen obviously the Mag 7, everyone knows that, but on an equal weight basis, can we really start to push higher and make new highs, which the equal weight hasn't done yet?
Right, exactly. Yeah, you need small caps to pick up the pace. You need the equal weighted. You need those other areas to continue to improve too. But I mean, the fact that we're still seeing strength from those kind of magnificent 7 areas as it kind of heading into earnings, I mean, still a positive sign. Right?
Oh, no doubt.
I think that'll be the technical backdrop. I mean, like you said, that's why we look at the technicals of it, right? I mean, we don't know necessarily which direction things are going to move moving forward, but all we got are the kind of the price movement to give us an indication of what we can look toward, right? And so keeping an eye on these support levels, maybe setting some alerts so you don't want to be kind of caught out of the blue if something changes. Could definitely be a prudent route to look toward as we work through this earnings season.
Yeah, I mean, and sometimes earnings aren't terrible, but they maybe aren't what people thought they were going to be, and you get a nice little pullback to support or something like that, and that's those are
some of these areas in overbought territory that could be
good opportunity to take advantage of after a pullback.
Yeah, for sure. Yeah, I mean, with that, like Tuss said, there's a lot of uncertainty out in the marketplace. I mean, we'll continue to kind of keep everybody updated on a week-to-week basis with this podcast coming out there each Friday. If you have any ideas about like things you want to look at, things you'd like to see us talk about, or things you wouldn't like to see us talk about, definitely reach out to us. Give us a shout there at dwa@dorseywright.com. We'll be more than happy to help you out there. So for those that are just listening as well, I know we talked about a lot of stock charts today. Just want to make sure, give a reminder, we do have the podcast is available in a video format on our YouTube channel. So we'll be sure to throw some of these charts up on that YouTube video recording there. But just to note, I know this is the podcast format there. If you want to check out the charts, either following along there on the platform, or certainly you can look at them there on that YouTube as well. So with that, Tuz, I think that kind of wraps up what we were looking to hit on here. So thanks for hopping in this week.
Yeah, it was awesome.
And thanks everyone for tuning in here with us this week. And we'll be back to talk with you next week for the first February podcast.